So yeah, good people. Welcome to today's session where we are going to be talking about some of the several things that are hindering most traders from becoming profitable. Um, this thing, it actually affected me and it made me realize that, okay, if you guys are not actually exposed to this thing, your journey might be a bit longer and it's going to help you guys to actually remove some of the things that you've been doing from your trading plans and everything, right? Which is the mistakes that is made by most SMC traders, supply and demand traders, and any other trader, right? So it's just us incorporate the market structure to whatever that you're using to trade without wasting any of your time. Please make sure that you create your Xness trading account. The link is there below. Why Xness, right? Like I said, I trade gold most of the time, and then if you want to experience a smooth trading platform, this is the right place for you to do that. Why? Because of Xness has instant deposit and instant withdrawals, unmatched spread. Guys, I'm not gonna lie to you, even the guys that are here that have been trading with Xness, they'll tell you that, okay, Xness spread is just way good when it comes to gold. 24/7 live support, which means whatever problem that you have is gonna be resolved swap free. Trust me, even if you hold trades overnight, you won't be charged for that. And then we have less slippage and best security class, right? Types of accounts, they offer us with different types of accounts. Let's just go to the professional account. So when you create your Xness trading account, right? Let's go to the professional accounts. So this one's, why am I preferring this ones is because of the spread is tight, right? So we have the raw spread, the zero, and the professional, right? Or the pro account. The minimum deposit for all of them is $500. And then if you don't have $500 to fund and you'd like to trade, I always recommend what? This one here, which is the standard account, right? So the standard accounts are quite simple. That's where you fund a minimum of $10. The spreads are also quite good. You get up to unlimited leverage. One thing I like about them. So, like I said, I found my profitability through trading with Xness by simply trading gold and having the unlimited leverage. So, if you're a gold trader and you'd like to experience a smooth, genuine, guys, I'm not selling you out. I won't sell you out on this one. One thing I'm telling you, even the guys that are actually trading with Xness, they know that at this moment there isn't literally any broker that can compete with this broker when it comes to their gold trading platform and their limited leverage, right? So make sure that you create your Xness trading account. Takes you at least a minute to create that account, man. And yeah, let's work together. Let's chop the markets. And the more you learn, the more you also try to use the information I'm giving you to profit from the market, right? Without wasting any of your time, let's actually go and talk about that mistake that is made by what most traders, right? I want us to talk about um, continuation pattern and reversal pattern. So, like I said, this is one of the key things that is hindering most traders from becoming profitable. So, why am I saying this thing specifically? It is because of even myself as an SMC trader. I was once an SMC trader and a good one also. The only thing that I faced that actually um made my trading journey a bit longer and everything was because of I wanted to learn everything and everything at the same time, right? And then I tried applying a lot of things. You know, the more you trade, the more you actually realize that, okay, trading is just something that is simple. You just simplify things over time. There's a lot of information. Yeah, some make them profitable, but some the information is quite pointless to you, right? So why am I talking about continuation patterns and reversal patterns today? It is because of you need to master the art of knowing when what happens and why does this thing happen in specific areas, and why are you supposed to actually not apply this thing in specific areas, and why exactly are you supposed to apply this in specific areas, right? Okay, continuation patterns. So let's just give them explanations, right? A continuation pattern is a pattern that goes with the overall direction of the market. The reversal pattern is a pattern that changes the structure of the market, right? This is the simplest way we can actually get to explain them. Meaning that for continuation, if you find yourself on an uptrend, you find a continuation trend doing what? Continuing the structure of price. So which means it's normally responsible for what? The impulsive movement of price, right? And then the same thing with the downtrend. If you find yourself on a downtrend, this means that, okay, price will be pushing up, which means the continuation is the one that is responsible for impulsing price to the upside. Right, and then the reversal will definitely be what? The one that changes the structure of price, which means we, when a downtrend, what is it that you're gonna see? We're gonna see price moving from a down structure to, and since it is a pattern, It can't what do you call this thing? From a down, it can't change the structure, the overall structure of price from bullish to bearish. No. What it does is that it moves price from an impulse to correction, right? Which means price will be moving from that impulsive movement to a correctional phase, right? And then on an up, the same thing is gonna be happening. We're gonna be shifting from the same thing from an impulse to a correction, right? We're changing the structure, right? Or we are moving from a correction to an impulse. It acts as a reversal, right? It's a reversal pattern. So it can either be from an impulse to correction or from a correction to the impulsive movement, right? So you need to know how does this thing actually, or how do these things actually work? So how do you actually get to master those things? You can only get to master these things when you have understood what the information I've given you previously, which is price alignment, which is price alignment and order flow. I mean, one of the reasons why actually most of you guys are not profitable is because of you just don't know how to align price and what is it that you're supposed to do to master the order flow of price. So that thing in general, man, it acts as a massive thing in your trading journey. You tend to make a lot of mistakes. Find that you're selling on a buying trend or you're buying on a selling trend, or you think price is gonna go to this direction, but on an overall structure, price is just moving in this specific direction. So you end up taking losses. Hence why when you started the session back then, I told you guys that don't even bother yourself. If you're on an uptrend, look for buying opportunities. If you're on a downtrend, look for selling opportunities. Don't bet this type of individual who's gonna be looking for selling opportunities or buying opportunities on the opposite trend. Don't be that type of individual because of you are gonna take unnecessary losses, right? So why is it important for us to know a continuation and reversal pattern so that we can be able to do what to build our A setup models? And A setup model is basically what your setup or your trading strategy. Okay, let me just fix this. The next setup model occurs when your trading strategy finally aligns with everything, right? It aligns with everything, which means what you're doing is maybe let's say, for example, it meets all the properties of an uptrend, it meets all the rules of an uptrend, it meets all everything about what do you call this thing? Your strategy. And then from there, all your properties or like the components of your A setup. Let me just say that to make it simple. It meets all the components of your A setup. Guys, each and every single individual needs to have like the components of their A setup. It's a must. So that you know which setup is like a winning setup for you and which setup is not gonna be a winning setup for you, right? But without wasting any of your time, like I said, continuation patterns, you normally see them when prices impulse into the upside on an uptrend, and then reversal patterns are the ones that you normally look for when price has to reverse back to a correctional phase, and you're gonna see them when price also reverses from a correctional phase to an impulsive movement. So they act as reversals. Continuation, the impulse with price to the upside. So what is the common mistake that most traders make? The common mistake made by most traders is that they want to change the structure of price, right? Without knowing how to change the structure of price. For example, for a normal SMC trader, what is it that you're gonna see most of the time? You're gonna see that okay, since our price eliminated this high, before you do that, let's actually get to understand what trend is this. This is an uptrend. How do we say that? We have a swing high, your swing high here, your swing low, your swing low, and then highs are being eliminated on an uptrend, highs are being eliminated, and then lows are always protected on this uptrend here. So what is it that comes at the back of your head whenever you see an uptrend? You're gonna look for buying opportunities on an uptrend on your um key level, or if you wanna call it what do you call this thing? Your point of interest, meaning that our buying opportunities can only be designed from what? Anything below our equilibrium phase of the market, at the discounted phase of the market, right? So those are the areas that we have our interest on. But we want to fix the mistake of actually failing to understand how do you actually look for a continuation, and when exactly are you supposed to look for a continuation, and when are you supposed to look for a reversal, and is it really necessary for you to look for a reversal within the market, right? Because of a reversal setup is more of a what do you call this thing? It's more of a B setup than an A setup. So how do you actually get to avoid taking those things? right? So those are the things that we are most interested in, understanding those things, right? So like I said, uptrend, we're looking for buying opportunities below the equilibrium phase of the market. Anything on the discounted phase of the market, right? But what are some of the mistakes that are being made by most SMC traders? What you see is price pushes to the upside, eliminates a high. It creates the first high, which is a break-off structure here, and then they call this thing a change of market character. So when you have a change of market character, the first thing that you do is to look forward for a supply area here that can push price to the downside. Guys, as much as you guys want to implement this thing, find yourself on an uptrend. Find that the overall structure of price is an uptrend, right? And then you're using this thing to actually change the structure of price to come to your demand area. Believe me, this is unnecessary. I'm not gonna lie to you. This is one of the areas actually where you're gonna take most of your losses. Because you are trying to reverse the structure of price against its overall direction. So what is it that I can tell you at the moment? What I want you to do is this: avoid taking the B setups at this phase of the market here and focus on taking the A setup, which is the one that's gonna have the highest win rate for you. Than actually doing what do you call this thing? Than actually investing your capital in a setup that has the highest chances of losing. This setup has like 80% lose rate, right? And this one has like at least 80% win rate. This one here. You have higher chances of actually winning this setup than actually winning the B setup, right? Because of you don't know exactly where the market is gonna change its structure. So why exactly are you looking for that change of character if you don't know where exactly price is gonna do what change its overall structure, right? So where are the areas that you should actually look for the continuation? The continuation can only be looked for in what? In the impulsive movement of price, meaning that when price taps into your point of interest, you should start looking for the continuation patterns, right? What are your continuation patterns? Your continuation patterns can be, like I said, for retail traders, can be a double bottom, right? It can be your inverse head and shoulder, right? It's a continuation of a bullish structure. It can be a wedge, if I'm calling this thing right, or a flat, what, right? It can be all these types of things that actually gets to impulse price to the upside. But believe me, you see with the correctional phase, you have the lowest chances of actually winning because of when price is selling here, it's mostly disrespectful to what do you call this thing, to patterns and everything. But like I said, for me, I'd rather wait for price to come to its point of interest and look for buying opportunities to come eliminate this high than actually try to change the structure of price. And then another mistake that is made by most of you guys is this one, right? You find yourself on the same bullish structure, and then you say that this is a break of structure, change of character, and then this is what a supply area here, right? That can bring price to the downside. Find that price respect that area, pushes down to the nearest demand taps, and then goes up to go eliminate this area. This means that you're looking for a reversal pattern inside what? A continuation of a bullish structure inside the impulsive movement, right? So you can't do these types of things. Reduce this thing of trying to change the structure of price. This is all I'm saying to you, right? And try to actually do what price is telling you. Instead of you going against it, go with it. Because the minute you go against it is the minute it's going to harm you, right? Unless if there's a pattern that you've actually established that price is gonna create three highs and then push to the downside after that, or price is gonna create something and then do the following things after that. Because of guys, you'd find that you have a beautiful sell here, right? You have a beautiful, beautiful sell here. Price tapped into the sell here. And then out of the bloom, there's just a spike, and then price goes down afterwards. Hence, what I'm saying that what you are exactly doing here is that you are killing yourself. How exactly are you doing that? You are gonna be in a situation where you are gonna be buying on the premium, right? You're gonna be buying on the premium. As you can see, price is still at what? The premium phase of the market. So if price is still at the premium phase of the market, you don't know where price is gonna reverse, right? Like you genuinely don't know where price is gonna reverse. So all you're gonna be doing is to looking for selling opportunities. You're gonna find yourself with negative 3R at this area here before price even comes to your area of interest where you are most likely to actually win the setup. So instead of you taking this loss here, rather wait for price to come to your main area here and then impulse with price, right? Which means your interests now, guys, trading is not as difficult as it is, as you guys make it. Don't look for selling opportunities on the premium phase. Rather, look for buying opportunities on the discounted phase. And when you look for your buying opportunities on your discounted phase, look for your point of interest, right? Look for your point of interest. look for your point of interest. After identifying your point of interest, all you have to do is to start looking for the continuations, right? Look for continuations of these things. Like I said, what is the overall wave? It's an impulsive wave. If price is on an overall impulsive wave, what does this mean? This means that within this impulse, there'll always be impulse and corrections within, which means there's an impulse, correction, impulse, correction, impulsive movement. But in general, it's impulse, correction, impulse, right? The overall movement is what is an impulse and correctional and then impulsive movement afterwards. But inside that impulsive movement, there is impulsive and correctional movement. And then inside that impulsive and correctional movement, there's also the internal impulsive and correctional movements. This is where the alignment comes handy. So you need to understand that, okay, price is creating what? So that you can know where it's going. After knowing where it's going, you can be able to look for the types of structures, not the types of structures, the types of opportunities that you're supposed to look for. I always tell you guys this. If you want to get good at this thing, understand the alignment and then only invest your time in the at the end of the correctional phase of the market. Meaning that, guys, we know that you're going long. There's an impulse correction, impulse correction. Price eliminates the low. It doesn't mean that when price eliminates the low inside this internal impulsive movement, this movement is gonna act as a what? As a change of character. The best thing you can do is to look for any form of point of interest below the low that was eliminated, because you can see that this can act as a temporary low, and then start looking for those buying opportunities. If not, another mistake that I don't want you guys to make is this one. You see prices on a correctional phase, right? Prices on a correctional phase. What most of you guys like to do is to also try to reverse price from a bearish to bullish, right? Instead of you looking for this change of character at this area, do the following things. Look for price, look for any opportunities above the low that is going to be created, which means you'll have to wait for price to create the low. And then after creating the low, what is it that you're going to do? You're going to start looking for buying opportunities after the low has been created. Why am I saying this thing? Because of you can take a loss here, price can go down, take a loss here, price can go down, take a loss here, find that price is coming to take this low out and then go up afterwards. So instead of you actually putting yourself in a situation where you're going to be looking for a lot of opportunities or the reversal area of price, look for the continuation instead, because it makes our lives more complex and simple, meaning that instead of you investing your time in buying on these areas here, I mean, yeah, buying on these areas here, right? Rather, start looking for buying opportunities within this area. Start looking for buying opportunities within this area. So these are the areas that are proven to actually be what profitable, which means you can look for a breakout like this, a breakout like this. With this one is a bit yeah, you can, but rather look for a buy here than look for a buying opportunity at the low straight, because you don't know. You don't know. So with the trend line, you know that your trend line can extend until this area here, and then you can get a break and then an entry here, then you impulse with price to the upside, right? Instead of you doing it the other way around, of you looking for opportunities on the lows. Right. Like I said, you also have to know the continuation patterns that price gives you, so that it can become simple for you to look for those types of opportunities. So what is the moral of this session? Avoid looking for reversal patterns, as they have the highest chances of losing. Invest your time in price alignment and order flow, because this is a bullish order. This can be a bullish order flow, right? Price respecting demands, price respecting demands, find price respected the demand here, demand here, demand here, right? Until it goes up to eliminate this area here, right? And then invest your time in understanding the continuation patterns that your pair that you're trading likes to create, and then look for those types of opportunities. And another thing, guys, you guys have a tendency of making this mistake. Oh, you guys, if you find yourself in these types of structure, right? Let's say price is somewhere here. Let me just give you guys an example, actually. Let's do something like this. So it's just gonna be modifying this thing for a few seconds. I want to ask you guys this question. If you find yourself, oh, is this thing removed? Oh, we can't remove it. So we'll have to modify it. Okay. If you find yourself in this type of situation, now my question to you is, which demand are we exactly going to be using, right? Are we going to be using the first one, which is this one here, or are we going to be using the second one? So I'm going to give you 5 seconds to actually give me an answer. So this is A, and then this is B, right? Write your answer down, and then write your answer based off the information that you've accumulated so far, like with your strategy and everything. Which demand exactly are we going to be using? Are we going to be using the A setup one or the B setup one? Which one are we exactly going to be using at this moment, right? So the answer is A. Why is it A? Because of the movement started here, right? The momentum of price began at this area here. So this one is just a continuation of this one here. So which means normally what price would do is to do what? Respect this area. We're using the reactional phase of the market to do what? To look for selling opportunities. You're using the reactional phase of the market to look for this selling opportunities, which is a B setup also, right? And then price will come to the demand area and then impulse to the upside afterwards. So normally don't go for this area. Why am I saying this thing? Because of if you take your Fibonacci from your low to your high, you can see that you're definitely buying where? At the premium area. You can't buy at the premium. Premium is expensive. Rather wait for that product to lose its value, buy at the discounted phase of it, and then look for those long opportunities to come and eliminate this area here, which means this structure is similar to this one here. Don't change the direction of price. Rather, wait for price to go to the right area so that you can look for the area for the opportunities that you're supposed to look for, right? So, yeah, this is what I wanted us to discuss. And then let's just go straight to gold and see what exactly gold is doing, right? As you guys can see that, okay, gold is currently on a bullish structure. We can't even argue about that. And then if you're a gold trader, you can see this pattern, right? That is the same pattern. Oh, back then I used to see Falcon. If you know Falcon, we've been trading for a while now. There was this thing he liked to use back in the days. Let me go look for it. Where is it? Just give me a second, guys. I want us to identify this pattern. Is it this? But this is a date range. I don't want to know the date and stuff. Let me come to text. It's not here at text. This thing is not here. It should be, is it ghost feed? I think it's ghost feed from here to here. No, it's not ghost feed. Sorry about that. Is it the bar pattern? Not this one. Oh yeah, it is something like this. Yeah, this is what I was looking for. Okay. So if you take this thing from this area here to this area here, and then you get this, and then if you take the same thing from possibly this area here to the current area, you can see that there's some sort of a similarity in between these two guys here, right? There's a specific level that is being eliminated on price, specific level that gets eliminated on price before we get what? The end of the correctional movement to the upside, right? Before we get the end of the correctional movement to the upside, right? So what is it that you should be able to see? So this is the pattern that you've identified so far on gold. So what is it that you can do as a trader? The best thing that you can do is to mark out the area that you know that price is most likely to reverse from, right? So what is Dumelo JPY saying? What I'm saying is this: when price is currently, let's just go to maybe let's say in 2 hours time frame, so we can get the overall structure. What is it that I'm saying? What I'm saying is this: instead of you trying to figure out whether price is gonna reverse here, price is gonna reverse here, or price is gonna reverse here, rather wait for your point of interest. Maybe let's say this area, somewhere within this area here, you had your point of interest, right? You had your point of interest somewhere here, right? If this area is your point of interest, instead of you looking for buying opportunities on the reversal phase, rather look for the continuation structure to the upside. Instead of you looking for your reversal space here, rather look for what? The continuation of price, because you can see that here, what is that we get ourselves exposed to? We get ourselves exposed to at our bottom that acts as a reversal pattern, right? Of a from a bearish structure to a bullish structure. Right here, this is a continuation of a correctional phase. This is what a double top price pushes to the downside. Here, you can see also here that there's a double top pattern here that pushes price to the downside, right? But the thing with most of you guys is this: you'll be looking for buying opportunities on what? You'll be looking for buying opportunities on your bearish structure, right? So this is something that I want you to avoid. When price is crashing, allow price to crash. Sell with it. Don't go against it. When they said that a trend is our friend, they were not lying. A trend is indeed our friend, right? So those are some of the things that I want you guys to do, to pay most of your attention to. And then with this movement here, like I said, if this is your point of interest, this means that, okay, from here going up, those are the areas that you want to do what? Start investing most of your time on, looking for buying opportunities on them. Like I said, the best thing that you can do at this moment is to become a trend line trader, because of this thing at this moment. For you to trade gold as a trend line trader, it's so simple, right? Like I said on the previous sessions, that you identify your high, And then you identify both your highs, right? These are going to be both your highs, first high, second high. From there, you implement what your major key. From your second high, you start connecting, right? You can see that, okay, there's a third touch on this area. There's a retest on this same trend line. Price pushes up. This one here, you can see also the same thing has happened, right? And then we finally get the break on the major key, right? You see, I'm not going against the structure. I didn't look for the selling opportunities here. I didn't look for the selling opportunities here. All I did was to do what? All I did was to look for the buying opportunities that I knew that price is eventually gonna create because of what? Maybe let's say there is some sort of a support area here. Maybe let's say there's some sort of a support area somewhere within this range here, right? That's gonna stop price from being what? That's gonna stop price from being bullish and then start impulsing to the upside. Like I said, it works differently. Some of you guys would have your supply and demand. For the supply and demand area traders, you know that okay, there's possibly a supply area here, right? Another one would know that okay, there's also a possible supply area here. It's just one thing over and over again. Right? It's just one thing over and over again. What is it that we see from price? Price keeps impulsing to the upside. The minute you see a correctional phase, not that after that correctional phase, there's gonna be what? An impulsive phase. Your goal is to look for buying opportunities within this thing. My students know this pattern. That once you see this pattern, you are most likely to make your biggest withdrawal of your life when you see this pattern. If you're being mentored by me, right? So you know that okay, this is like, and I told them that this is what you should experience most of the time when you're looking for that pattern, right? Price keeps pushing to the upside. So instead of you trying to figure out, looking for selling opportunities, someone out there would say that there's what a possible supply area here, right? You get eliminated. So you are basically gonna use all this internal range liquidity here, right? To look for selling opportunities. You're gonna use all of them to look for supply areas. Yet all of them, they're going to be what? Respect break, respect break, respect break. Right. So instead of you doing that, rather look for your demand areas use those small retracement to look for your demand areas so you can look for your buying opportunities. I said it last time. Every high break will force price to come back inside. If price comes back inside, look for a demand. If you look for a demand, look for your what do you call this thing? Opportunities that align with the structure of price. So which means you won't see me trying to look for selling opportunities to bring price to a demand. Rather, wait for price to come to a demand area, buy from this area, and then impulse with price to the upside. That's what I prefer to do, which means if I'm on this selling order flow, I'm not going to look for buying opportunities within this area to bring price to the supply area. I rather wait for price to go to the supply area and push down with it because of, trust me, you will take losses. You will take losses and unnecessary losses, right? So for today's session, this is what I want us to discuss, talk about the things that you must do as a trader to avoid taking all these unnecessary losses that you're taking. Reduce, build an A setup model that aligns with the direction of price and then wave. It's as simple as that. Avoid this thing of trying to become a genius, man, right? And wishing you guys nothing but all the best of luck. Another thing, guys, there's something huge coming. There's something huge coming on Friday, hopefully on Friday, and I'm gonna be launching it. I'll talk about it here on Instagram. I'll talk about it on YouTube also here. I'll talk about it on also the free group. So join the free group so that you won't miss that announcement that I'm gonna be making, right? And then I'll also be doing a giveaway for the guys that are trading with Xness. So if you're trading with Xness, right? If you are trading with Xness and you'd like to be part of this giveaway, I think I'm gonna be giving away a tablet, right? I'm gonna be giving away a tablet because some of you guys are trading, but you don't have trading tools and any other things, and some few cash to you guys, right? Straight to your Xness trading account. Make sure that you create your Xness trading account, you send me a message, you find your account and you trade with it. And then the guy with the highest return of the week or the month will get the prize. Or I'm just gonna do a random. But if I do a random, some of you guys will trade once. So I'm gonna give it to the guys that is actually profitable, right? And yeah, thank you for watching this session and goodbye.